Hi, this is Brian with New Mexico Dream House at Keller Williams. We're about a week late on our October market report. I took a week off last week, spent it with my wife. Sometimes you gotta do that. It's been a busy year. In fact, we passed our last year's number well over a month ago, and we've been busy still. So this market's pretty crazy. And I'm pretty excited to talk to you about October because there's some good indications in the numbers. So the first number that we always look at is absorption rate, and of course the absorption rate is how long it would take to sell everything we have on the market if we stopped listing property today. That's down to 4 months, so that's down from 6.9 months last year this time. Now there are a couple things driving that. October was a barn burner month. As far as sold listings, houses that actually closed in October, those are houses that typically go under contract end of August, beginning of September. Will typically close in October. So we were up 37.8% in closed listings. Now, there are a few things that are driving that. Interest rates right now are bonkers. So incredibly low historically. So that's driving a lot of new buyers into the market. So that was huge. The number that's a little bit more disconcerting, and this isn't a sky is falling type of number, because this always happens in a presidential election year, is that pending listings were down. As far as those are houses that were on the market that went under contract, that was down about 40% from last year. Now that's not a sky is falling number because the inventory levels were down 35%. So the pending listings, under contract listings, was directly relational to the lack of inventory that we have on the market. So that means a lot of people are just kind of waiting it out, trying to see what was going to happen with the election. And heck, we're still waiting to see what exactly is going to happen with the election. There are a couple things that we've seen happen directly because of the election. One of those things is that interest rates just kind of went bonkers. That always happens post-election, especially when you don't know who is actually going to end up being president. We have a president-elect, but there's also 5 states that are still recounting and counting, so we really don't know what policy looks like moving forward. We have one candidate who's saying that the free market will take care of itself, and we have another candidate who's proposing massive stimulus checks and proposing massive amounts of stimulus for first-time home buyers. In fact, that amount, Joe Biden's new stimulus plan that he has projected, is talking about a $15,000 credit for first-time home buyers. And if you're a first-time home buyer, you might have just went, woohoo, this is exciting, $15,000. Well, that's not exactly how it works. We tried this in 2009, and it wasn't great. What it did is it actually drove prices up, falsely inflated the market. So for buyers and sellers, you might be buying a house for the first time, but that $15,000 credit comes in the form of a tax rebate. And often, if you only live in the house, I think the last one was something like 36 or 48 months. If you lived in it any shorter than that, you had to pay back the stimulus. And what happened is actually falsely inflated the market in all price ranges. So the stimulus thing isn't something that I would be waiting on if I were a first-time home buyer, because likely what we'll see interest rates drive up as well. We'll see the market drive up as well. So house affordability will actually, in my opinion, go down with the stimulus plan. I think it's a political ploy. I think it's a way to satisfy voters. I think it's nonsense. I think the free market will actually take care of itself. So that's something that I would be looking at, is that $15,000 housing credit. It'll be interesting. It'll cause a lot of movement in the market. I don't know that it's going to be great for the health of the market long term. It might falsely inflate it, which could potentially cause a crash and falsely bolster the real estate market. That's exactly what happened in 2009. History tends to repeat itself. I also want to talk about interest rates for a second. We've talked a lot about interest rates this year because they're mind-bogglingly low. They were just below 3. Now, there was a huge announcement this week by Pfizer, and they announced the test results of the first COVID-19 vaccine, and they're saying it's over 90% effective. What does that have to do with the housing market, you might say? Well, that caused Pfizer stock to skyrocket the other day, and actually that caused the entire stock market to move up. Well, stock market moving up, that's a good thing, right? That's a great thing for housing. It's not great for housing. Because what it does when the markets start to go up, so do interest rates. Money costs more money when everybody's making money. So we don't know what the volatility looks like long term. So if I'm you right now, and I'm taking my own medicine, and I'm thinking about buying, I'm gonna take action, and I'm going to go down, talk to a loan officer, get locked in at an interest rate. Well, we have to find you a house before we get locked in. But I get that pre-approval out of the way. I'm gonna go find a house, get locked in at these historically low interest rates. House affordability is probably as low as it will ever be. So it's time to take action. October, it's an interesting month. There's a lot of numbers that have conflicting views here. But if you're a buyer, it's great because we've got good interest rates. If you're a seller, it's great because we've got lower days on market than we've had in a decade in San Juan County. So I'm excited about what the future holds. It's a great time to be in real estate. It's a great time to be buying, selling, investing in real estate. Give me a call for all your real estate needs. I'm happy to explain some of this in greater detail. I'll talk to you guys soon.